Gold is not only breaking records in terms of its price performance, but there's something about this rally that is very different than what we have seen in the past. I'm going to explain what that is and why it's likely not going to slow down anytime soon. Let's explore! There's something highly unusual about gold's recent breakneck performance. It's happening at a time when stocks are also doing well, and there isn't a crisis, writes Fred Imbert. But the problem is, crisis is a very loosely defined term, and we have seen crisis after crisis in terms of economic uncertainty, especially regarding tariffs and geopolitics. And that is something that is starting to foment gold's bull run that we've seen really since 2022. Nonetheless, futures contracts tied to the precious metal are up over 61% year to date, while the S&P 500 has risen 14%. Barclays trading desk noted that this makes equity performance relative to gold the worst since 2008, the seventh worst year of all time in relative terms. From 2002, 1979, 77, 74, and 73 were the other incidents that had occurred. But this time around is much more notable than all the other instances of gold outperformance happened in bear markets for stock or other major economic crisis. So that's the backdrop of what we're looking at here in terms of the gold market and what's happening with regards to its price. But one thing is for sure, we're seeing gold touching at least a time at $4,300 an ounce recently, a record price that is accompanied by record silver prices breaching the $54 an ounce recently. The gold mining sector has been appreciating in 2025. Van Eck, Ruffer, Goldman Sachs, Sprott have a position in this New York Stock Exchange American-listed company. Today's sponsor is that company, listed on the New York Stock Exchange. What you're about to see is a special because GoldMining Incorporated, with the ticker symbol GLDG, is a gold exploration company with over 10 different projects in the Americas. But it also owns large positions of publicly listed gold companies, giving exposure to additional catalysts and leverage to gold prices at the same time. GoldMining Incorporated's market cap is around $332 million as of October the 14th, 2025. Yet its portfolio of equity holdings, including cash positions, are worth about $236 million alone based off of the October 14th closing prices and cash balances at August the 31st, 2025. That's before giving any value whatsoever to its portfolio of exploration stage gold-focused projects across the Americas and any additional potential value and optionally from its uranium project located in one of the world's highest grade districts, the Athabasca Basin in Canada. On top of all of that, the company has no debt. The market cap of GoldMining Incorporated, GLD, on the New York Stock Exchange was $332 million as of October the 14th, of which appreciated over 100%. So based off of its most recent MD&A as of August the 31st, 2025, and closing prices of underlying securities as of October the 14th, 9.9 million shares of U.S. GoldMining Incorporated are quoted at $143.2 million. 21.5 million shares of Gold Royalty Corp are quoted at $78.4 million. 19 million shares of Nev Gold are quoted at $7.9 million. And 84.4 million shares of Australian Mines Limited are quoted at $1.4 million. Total equities holding is valued at approximately $231 million. GoldMining Incorporated has a market cap of $332 million. GoldMining Incorporated has positions in these four companies, two of which nearly tripled in 2025 so far, and above that, GoldMining owns one of the largest gold and gold-copper resource stage mineral portfolios in the Americas. We're talking over 10 projects located in pro-mining jurisdictions in Canada, the U.S., Brazil, Colombia, and Peru, with an estimated 12.4 million ounces of estimated gold equivalent in the measured and indicated category, and an additional 9.1 million ounces of estimated gold equivalent in the inferred category. GoldMining Incorporated has announced plans to advance 4 key projects. The company commenced its largest ever exploration program in May 2025 with the São Jorge project in Brazil. It has approximately 1 gram per ton open pit resource with regional growth potential on a 46,000 hectare, which is about 115,000 acres land package. Targeting resource growth is important given the industry-wide challenge of reserve replacement as major producers deplete reserves rapidly. The gold mining portfolio includes increasingly large-scale gold and gold-copper projects in mining-friendly jurisdictions. If these projects are progressed successfully, they are just what the major operators will need to replenish reserves mined through production. These are projects in safe jurisdictions with infrastructure advantages and a management team with deep experience in building value over time. Gold Mining's leadership includes mining veterans, including former Goldcorp CEO David Garofalo and serial entrepreneur Amir Adani, who serves as co-chairman. Insiders own over 10 million shares, showing strong alignment with shareholders. If you want exposure to gold through a company with exposure to gold price, a pipeline of development projects, and interesting institutional and insider backing, Gold Mining Incorporated deserves a closer look. As always, make sure you review Gold Mining's public filings for important information regarding it and its projects, including its most recent annual information form and technical report referenced in them. These are all available at sardosplus.ca. Now, gold is a metal that is going to continue to climb, I feel, because what makes this time around so much more notable is that all the other instances of gold outperformance happened in bear markets for stocks and during major economic crisis, and we're not there yet. GDP has been doing quite well, and a recession is measured by 3 or 2, at least 2 times of negative GDP growth, and we've not seen that yet. Gold is usually seen as a safe haven, so it makes sense for it to outperform the S&P 500 during stock market or economic downturns. And so what we've been seeing here, gold has skyrocketing in 2025, while stocks have also chugged along, reaching some important record levels as well. The metal climbed above $4,200 an ounce for the first time this month, while the S&P 500 topped 6,700 earlier in October for the first time as well. What does this mean for those of us who stack and invest in it? Well, at a minimum, it illustrates that a world of narratives around inflating assets, debasing currency, U.S. equities are arguably not the worst offender of 2025. Or at best, to flip the story on its head, well, we can see an equity bubble as it's in gold. Investors should be more worried about exuberance ending abruptly. And so that is what we're looking at there. Will it end abruptly? Who knows? But one thing is for sure, I don't think it's likely going to continue because central banks around the country have been, around the world, have been continuing to accumulate gold at a record pace. And I think we're going to continue to see that. And there's going to still be uncertainty. There's uncertainty with our relationship with China, and as well as tariffs and the like. And there's uncertainty economically as well in various different areas. But one thing is for sure, inflation is still rearing its ugly head. Inflation is something that I think we have to keep in mind and keep in focus, because even if it was to stop right now, prices are not going to go down. They're just going to stay where they're at. But we know it's not going to stop. Inflation is going to continue. And so this is why we continue to hold gold, because gold has outperformed a lot of different things this year, breaking record levels when adjusted for inflation, and that's going to continue. Because all the other indicators out there, even if we don't have a crisis, even if the stock market continues to do well, those things, in a sense, are temporary. Gold is really eternal in the grand scheme of things, and I think that is something that a lot of people are seeing. De-dollarization is still here. That is something that we've got to keep in mind as well, too. And until central banks start to sell off a very good portion of their gold, even if they were to stop accumulating more, I think the prices are going to continue to climb up even higher.
It's just a bull market that I think is not going to stop anytime soon. More and more people are realizing it, and we've talked about buying frenzies in Japan and parts of China and in New York City as well. There's a lot of that happening. People are waking up to what gold is, and the mining sector is certainly seeing a benefit of that as well. So let me know what your thoughts are in the comment section down below. I hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.